Hello and welcome to Crypto Weeklies. Today in this video we are going to analyze Avalanche and its token AVAX, conduct machine learning based price forecast, the risk analysis as well as some of the accumulation strategies. None of the content is financial advice and all of the content is available on this website cryptoweeklies.com. This is our website. It has information, machine learning based forecast, regression analysis, accumulation strategies and summary indicators for most of the top 100 cryptos by market cap. You don't have to pay or sign up for anything. The link is on the bottom of your screen. The first chart that we are discussing today is the AVAX summary risk chart. This is available over here. This is the weekly price action of AVAX, and these lines. The first blue line is the 20-week moving average. The orange line is 100-week moving average, and the red line is 200-week moving average. And per this analysis, if the price right now is over the 100 week moving average at around $23, but slightly under the 20 week moving average at around $27.5. As you can see, it's slightly under the 20 week moving average again and also under the 200 week moving average at around $32. So if we were to have a rally, the $32 level, which would correspond to the 200 week moving average, would be a key level to watch. Again, a 200 week moving average has not been in existence since as before July 2024. Again, this asset is almost 200, slightly over 200 years old. That's why you're seeing this red line appear over here. And if you want to check AVAX's price instead of with the help of moving average one at a time, if we were to normalize the risk based on the price action and the distance between the three moving average, that is a 20 week, 100 week and 200 week, we'll get a chart similar to this. The purple line which explains how much risky it is to put money in AVAX at any point in time. Again, the key idea is whenever the risks are low, that is, again, you can make up your own mind with, let's say, 0.4 risk. Below 0.4 risk, AVAX becomes more interesting to you. It has been below 0.4 risk since March 2021. Again, there were only a few instances where risks were above 0.4. Again, if you were to draw a straight line from here, an imaginary straight line from here, whenever the purple line is below this 0.4 line, that's a good time to enter. Again, right now the risks are at around 0.28. that means not too high risk, but again not as low risk as August 5, when the price was at around the lows were at around $17 for AVAX. So this is one way to summary analyze AVAX. If you were to normalize this price action instead of a candle into a weekly average, this is the chart that you will get in white till about week ending in September 22, which will be this Sunday. If we were to feed this data to the machine learning model and ask for the machine learning model to come up with the base case, which this would be the line in pink, the bull case would be a line in yellow at around 70% confidence, and the bear case similarly at 70% would be the green line. Per the machine learning model, the base case scenario for AVAX between now and end of year is price action between $23 and about $28. That's the current price action for AVAX. If on the other hand crypto witnesses a bullish quarter 4, the price could be between $28 all the way to about $62. If on the other hand the market witnesses a pullback between now and end of December, the price action could be between $10 and $21. Again, the purpose of these forecasts is not to tell what will happen tomorrow, that is if the market has to go up or down. That is determined by the market forces and macro and microeconomic data pertaining to either to the crypto or the wider macro environment. But the purpose is more towards what could happen if the market were to go up, what are the theoretical possibilities, and similarly if the market were to go down, what were the theoretical possibilities. And these are week by week possibilities. So again, if you are interested in tabular valuation, so a 1 standard deviation bottom in for this week would be at $21. So it would take a lot for AVAX to crash beyond $21. Similarly, it would take a lot to rally for AVAX to rally and provide a weekly average at around $29. Again, this is the key idea with these forecasts. Again, for the next week, similarly a $30 AVAX at a weekly average, $30 AVAX would be a big deal. Again, if on the other hand we witness a mania phase over the next couple of weeks, the 95 percentile bull case would be at around $38 and $46 for AVAX. So that's how these forecasts are supposed to be interpreted. In terms of the regression analysis for AVAX, this is again the same weekly price action in white. On top of them there are the regression based valuations. The pink line in middle is the polynomial regression based fair value for AVAX. On top are the 3 standard deviation bull cases, and on bottom are the 3 standard deviation bear cases. So the fair value per the polynomial regression analysis is at around $36. The 1 standard deviation bottom is at around $21. Again, coincidentally, that's where AVAX had its bottom during August, as well as twice in August, and ever since it has not looked back. So 1 standard deviation bottom has provided some support for AVAX. Again, throughout the course of the bear market, you can see that the price rarely went below the 1 standard deviation bottom. This is not retroactively fitted. This is an ongoing function on AVAX's price. So if we were to look at what are theoretical topping scenarios for AVAX at a 1 standard deviation ceiling is at around $61. And if similarly, if we were to spend some time on the between the bottom and the top of 1 standard deviation cases is between $21 and $61. The token has had a tendency to have like a oscillation between these two levels, and slightly deviates to the downside and slight deviations to the upside. Again, the last time it failed to reach the 2 standard deviation ceiling. Back then the ceiling was at around $70. Right now the 2 standard deviation ceiling is at around $102. During the mania phase, that is again like it did in 2021, the price came close to the 2 standard deviation ceiling. So again, this regression analysis has a non-linear view of the relationship between price and time. That means there are phases where the price goes up with time, then that is typically during the mania bull phases, and also phase where the price goes down with time, particularly during the bear market. So that's where the valuation for AVAX looks like in terms of regression based approach. Now if we were to accumulate AVAX, there are 3 models: the simple moving average, the DCA or dollar cost average model, and the last one is the time weighted average price model. The first model is a shorter term model to check if there are any mean reversion trade. For this model, right now the risk level to accumulate AVAX is at around 0.37. Again, the third or fourth best time to DCA AVAX. Again, you can see that during the bottom, the risk level per this model was at around 0.3, between 0.3 and 0.4. That is because this model considers only the 20-week moving average of AVAX and the proportional distance between the price and the 20-week moving average. Again, usually during the initial phases of the bear market, that's when the price deviates the most from the 20-week moving average to the downside, and during the peak of the bull run, that's when the price deviates from the 20-week to the upside. Again, this is the purpose is to identify if the market has bottomed, that is the initial crash is over, and after this initial crash, that is the plum colored risk level between 0 and 0.1, that gets over. That's when the likelihood of the mean reversion trade becomes higher and higher. Right now we are not in the phase, but again, coming shortly we might see AVAX as we go into 2025, and if the bull market comes back, that this orange and red color makes more and more important to again scale out of the market if the market is overheated. The second model is the DCA model. Per this model, this is again the polynomial regression function based risk level, the proportional distance, time adjusted proportional distance between the price and that polynomial regression based fair value. You can see back in 2023 when September, when the price was below $10, this model was flashing this buy signals between risk at between 0 and 0.1. Right now, per this model, this is the second best time to DCA AVAX. Again, this is the risk between 0.1 and 0.2. Most of the bear market AVAX did spend in this territory. That means that this means that although it's not the absolute best time, but again, realistically speaking, it's still within lower risk between at 0.1 and 0.2. As you can see that whenever the price deviates to the upside, that is goes above this peak regression valuation like it did in March of 2024, that at that time the risk level were at 0.79. Again, scaling out whenever the risk go beyond 0.6 or 0.7, this at this time does make sense. You can see historically speaking, these were some of the best time to scale out of the crypto trade. Right now we are not at that position. Right now the fair value is at $36 and price is slightly below the fair value. In terms of analyzing in a longer term, which is the time weighted average price based analysis of the accumulation, for this model the risk is essentially zero at this point because the price is below the time weighted average price, that is at $31. As the price is lower than $31 for this model, this is the best time to dollar cost average. Again, this model does not deal with the absolute bottom or the best time to DCA, but more towards a zone where DCAing makes more sense, like it described between May of 2021 till about December 2023, sorry, May of 2022 till December of 2023, then again back in starting March of 2024 till and extended beyond June and June, July and August and most of the September of 2024. So per this model, again at best time to DCA AVAX. To summarize, per the TWAP based or time weighted average based model, best time to DCA. Per the summary or the moving average based model is the risks are at between 0.2 and 0.3, again third or fourth best time to DCA. But the DCA model, again second best time to DCA AVAX. For the SMA model, the price or the range right now is close to how AVAX bottomed in 2023. And also for the regression model, the valuation is slightly under the fair value at around $36. That's the fair value. Between $21 and $61, that's the one standard deviation case for AVAX. And last but not the least is the machine learning based price forecast. The base case is currently between $23 and $27, close to the current price. The bull case between $28 and $62 till December of 2024, and the bear case between $10 and $21 between now and December 2024. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.